If you want to know when to sell Bitcoin before the next crash, this video is for you. Today we're going to talk about the Pi cycle top indicator, one of the most accurate indicators for identifying major Bitcoin cycle tops. Historically, it has managed to detect major market tops within just a few days of the actual peak. So how does this indicator actually work? The Pi cycle top is based on two very specific moving averages. The first one is the 111-day moving average, which you can see here in yellow on the chart. The second one is the 350-day moving average multiplied by 2, which appears here in green. Important detail: this is not a 700-day moving average. We simply take the 350-day moving average and multiply its value by 2. The signal is extremely simple. When the 111-day moving average, the yellow line, crosses above the green line, which is the 350-day moving average multiplied by 2, historically, that crossover has marked the cycle top. In the last 3 major Bitcoin cycles, this signal identified the top almost perfectly. Why does this work? Because when a short-term moving average reaches such an extreme multiple of a long-term moving average, it means the market is completely overheated. Euphoria is at its peak, speculation is excessive, and price action becomes unsustainable. Fun fact: 350 divided by 111 equals approximately 3.153. That's very close to the mathematical constant pi, which is 3.142. And that's exactly where the name Pi cycle top comes from. Now let's look at the current situation. Bitcoin reached an all-time high around $126,000 in October 2025. Since then, the market has been in correction. As of February 2026, Bitcoin is trading around $66,000 in a clear corrective phase. On the current chart, the green line, the 350-day moving average multiplied by 2, is sitting around $200,000. The yellow line, the 111-day moving average, is around $90,800. So we are still very far from a crossover. That means that, according to the Pi cycle top indicator, the market has not generated a classic cycle top signal. Either the October 2025 high was not the final top of this cycle, or the market structure is evolving differently from what we've seen historically. What you need to understand is that the Pi cycle top is primarily an indicator of extreme overheating. Right now, with Bitcoin at $66,000 and the short-term average still far below the long-term average multiplied by 2, we are clearly in a corrective phase, not in a euphoric blow-off phase. And that's important information. However, a word of caution. This indicator was extremely accurate during Bitcoin's first 15 years, in its early adoption phase. With the arrival of ETFs, institutional integration, and a much larger market capitalization, future cycles may become less explosive and more gradual. No indicator is magical. The Pi cycle top is a confirmation tool, not a crystal ball. If you trade or invest in crypto and you're looking for reliable platforms, you'll find the exchanges I personally use in the description and the pinned comment, with sign-up bonuses and lifetime trading fee discounts. And if you want more analysis on Bitcoin market cycles, on-chain indicators, and the best strategies to navigate these phases, make sure to subscribe. I'll see you very soon in the next video.